All right, hey there. Good morning, everybody, from a very overcast and kind of rainy morning here. Uh, I am Christopher Inks, and this is I'm from West Texas Capital, Texas West Capital. Guys, you know what? It's just can we just start over? Can we just do this again? I'm having a heck of a morning so far. Anyway, Christopher Inks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Friday, the 9th of July, 2021, and I've got your. Look at the markets coming up here, guys. Like I said, it's been rainy over here, and I think it's kind of throwing me off a bit. It's been quite a wet summer already for us. Once again, definitely cannot complain about that. People up north were giving us a heck of a time about what happened here with that snow and ice there in February here in Texas, almost shutting down the power grid and everything. And I think they're apologizing a bit now with all the heat they're getting up there in the Pacific Northwest and whatnot. So, what goes around comes around, I guess, right? How are y'all doing today? Hello there, Mark. Good to see you. Bill's here as well. Let me see here. Who else is here? Telluride, what's up, man? Mike Kane is here. Hank is here. Good to see y'all checking in. By the way, for those of you that don't know and haven't done yet, we've still got our little summer sale thing going on here. So get 50% off our already reduced annual Tier 3 subscription there. You'll get access to well over 100 hours of video education now. You get 3 live streams a week. On Mondays is Wyckoff. On Wednesdays is Tips, Tricks, and Techniques. And I'll tell you what, right now, you're going to get a... If you are not getting your money's worth with Wednesday, I don't know what to tell you. I honestly don't. Amazing, strategies and whatnot that we teach you with rules-based strategies. So that way, even if you've never really traded a day in your life or you're just not a consistent trader, these give you ways of getting into trades intelligently, logically, rather than just trying to guess. Again, rules-based strategies there. And then, of course, on Thursdays, we have Elliott Wave. This week, of course, don't forget, guys, if you are Tier 3 and you're listening in, we'll be doing our Wyckoff that we were going to do on Monday. We'll do it here today at 3 p.m. Central Standard Time. And that way we can make up for Monday since we had that 3-day weekend, holiday weekend here in the U.S. But yeah, you guys come in and you don't have to worry about, oh man, I missed whatever, because we archive it all. We archive every bit, and you can come look at it anytime you want. You on your schedule. If you miss the live stream, it's no worries, man. We put the archive link right up there afterward, and you can still ask questions and whatnot. It's all good, right? And then, of course, everything else we do. So tons of stuff going on, guys. Crypto indexes every week. We do TLT a few times a week. We update another 24 different instruments there daily and intraday. Everything from cryptos to gold and silver to oil and natural gas to what else do we do? The 3 indexes. We do NASDAQ Composite, S&P E-minis, and then we do the Dow Jones as well. Man, so much stuff I can't think about it. DXY, we do that. Tons of stuff. Anyway, we'd love to have you there. So you'll never get a price is cheap. This is our cheapest that we've ever done it. And, again, the goal is to get you guys in there for a year. Why? Because sometimes you come in and you think you can learn everything you need to learn in a month, and that's all there is to it. And it's not. It takes a while to become a good trader, or at least a consistent trader. It doesn't happen overnight. Often you have to spend a while being reminded of the things that you're going to ignore. And so you get a lot of that with us. So hopefully you guys will join in. We'd love to have you there. Who else has joined in already? We've got Data here. We got 51 ETH. What's going on? Good to see you. Excuse me. Is that T-Ball there? Sup, man? Good to see you checking in. Devin's here. Data, of course. I think I said Data, but I'll say Data again. Let me see here. Jack, what's up, man? He says very much the money worth. There's a fan. What did you say? There. Oh, Tier 3 is fantastic. It made me some real money. Oh man, glad to hear it. Thanks for saying so. Yeah, and you have to apologize. Again, my eyesight isn't what it used to be. I'm not the young buck that I once was. So next week, guys. Next week you'll be seeing me sporting some new glasses, and hopefully it'll make a world of difference since I stare at the screen all day, every day to help you guys out. What's going on there, Brian? Michael, good to see y'all. DeWads, what's up, man? You say you're in the UK and stay up whatever the time? Oh, are you talking about for the Tier 3 sessions? Yeah, but again, we did that. We do the tips, tricks, and techniques on Wednesdays at 4 p.m. Central Standard Time, and then we've got a lot of people from the UK and other areas over there, in that area, and then they said, hey, listen, is there any way we can do the other streams sooner? So, we do Wyckoff and Elliott Wave there an hour earlier. We do them at 3 p.m. Central Standard Time. Try and help you guys out a bit, do what we can. And there's Spar Architect, good to see you as well. Lewis Winthorpe III is here. Says, you usually catch a few lives a week. Only Elliott Wave kills the brain, especially with the session ending at 11 p.m. Yeah, Elliott Wave, guys, here's the best thing about Elliott Wave. We'll start talking about this in a minute here, but just if you didn't know, again, most people use, or when they first come in and try to learn Elliott Wave, they learn it because they think that it's going to tell them exactly where price is going to go, and that's all there is to it. And really, the best thing you can use Elliott Wave for is to understand the trend. If you understand the trend, you can get in with proper risk management. You can get in anywhere in that trend and make money. Elliott Wave is good for knowledge because even if your count is wrong, you know immediately where your invalidation level is. And so if you know where your invalidation level is, that you know where your stop loss goes. And if you know where your stop loss goes and where your entry is, you can back into a proper size position instead of just throwing it all in on one shot and hoping it goes, right? And so that's really the great thing about Elliott Wave. But Elliott Wave does take time, guys. You absolutely have to memorize the rules, and you need to memorize the guidelines as well, and you have to understand the difference between the two. But man, oh man, so much, it can be used so much to help you out in so many different ways. But that's what we do on Thursdays. We go over it every week. We look at some charts, and we discuss it, and I explain what I'm looking at and why. And it's this idea of this application. There's a difference between theory and application with everything that you guys do as traders. Please understand that. And that's what we try to do at TWC, is to get you to understand the reality of trading. Not just get caught up in what the theory says. We say, well, this is how you really apply it. And these are the things you really should be looking for. And these are the things that you should give more attention to. And so that's the goal there anyway. So good to see y'all checking in here. Here's Bitcoin, guys. And so, we've got different counts going on, depending on what may be going on. So the last few days, I've kind of just been looking at this chart here with Discord. The idea being that we're trying to ease what they're looking at, to be able to find a cleaner chart, something that doesn't have so many, because if you're new to trading and, there's multiple Elliott Wave counts, you might get confused with that. So what are we looking at? Really, guys, I mean, at the end of the day, with where we're at right now, if we break down below this swing low right here at about 30,179, that all but guarantees that we're going down toward around 24,000. However, if we break out above this swing high right here, this 35,950 or so, 48, if we break out about that, now all of a sudden that bullish count starts looking a lot stronger there. Now, I noticed, I've got this phase, C and phase D and all this stuff kind of drawn on here. This is all from previous. And there's no guarantee that this is it yet. This could still all be part of phase B here. But I think it makes most sense right now that phase C is done here. We're moving up. So we would have like, phase C here, and then we'd have phase D. And then we'll have phase E. So phase D would be your interior markup, so interior to this trading range here, as it marks up there, and then phase E being your exterior markup as you leave the range. So really, we just kind of need to get some further move up here. Now, man, again, this is my big hanger here. This is why I can't guarantee that price is going to go down. This right here. You've got this strong volume. You've got this strong rejection by demand there. So, I mean, at this point, this tells you that supply tried, and then demand just kind of whooped up on it. And, you even ended up slightly higher than where you opened. But you've got this large demand wick. You've got this large spike of volume here as price broke down right below the range low. That gives you a spring right there. Then you have, as I've talked about, you've got this secondary test here. I'll just put it as test just to kind of clarify what it is exactly. So this is a test now of that low. And why is this a test of that low? Because the volume is so high. So when you have a spring that comes on this very large volume like this, what you're going to see is a pullback to retest this area here and make sure that it's legit, make sure that it's done. So price pulls back, and as you can see, look at how much smaller this volume is. It's insignificant compared to what it was. This tells you there's just a lack of selling interest here after this big move. So this is a successful test right here, and then we move up. And so we've made this swing high up here. And if you know, again, if you look left, guys, I always tell you look left. Look at where this goes right here. This area of support resistance. So really, it's kind of this, and then we've got this secondary high right here. So it's really this area that you need to get above. So basically, you know, right around that 37,000 area. If you can get that done, I'm leaning pretty heavily toward the bottom being in. So that's why we're watching this right now. So as far as a count goes, it's possible we've got a 1, 2, 1, A, B, C is 2. Or it's possible we have a 1, 2, 3, 4, and then we'll have a 5 here as like a leading diagonal. But if we can break out, first step is this swing high right here. And that should carry us then above this swing high, because if that's impulsive breakout of this descending channel resistance here, that should carry it above the pivot and above that local swing high, which should then set up for that move above that swing high over here. And once you do that, at that point, your next target is this up here, what is this? The 4-hour supply structure up here, right around here. See if we can kind of put that in there. And that should be your next target there at that point. And if you're getting there, I'm all but guaranteeing that, you know, you might get a bit of a pullback in this area, but it should go higher. Again, the key is this area right here. So, I mean, that's kind of where we're looking. So this right here is what really leaves me unable to guarantee that price is going down further. This is making a strong case for a possible low right here. We just need to see that follow through above this area. Let me see here. Gosh, let me see. So, you know, locally, I guess we'll just talk about this. Locally, again, we've got this descending channel resistance here. So we broke out. Last night I talked to Discord about this, our members. And so we got it. We got the breakout here above the descending channel resistance. Oh, I'm sorry, the EQ here. And this is a large candle, and it's a spike of volume. So you've got this spike of volume and large candle spread, which says, okay, this should be a legitimate breakout, which means now we're going to look at our next target being the descending channel resistance. If we break out of that, then we've got a pattern target here of just about $2,500 and almost $40 above the point of breakout. And that's based on the height here of the pattern of this channel. But again, if we're doing that, guess what? We take out the 4-hour pivot. We break up through it, which is bullish. We break up through the local resistance here, swing high, and then the further out swing high here. And that, like I said, that's getting bullish now. Now we're looking further up. Because at that point, like I said, right now, without going above this swing high up here, we only have 3 waves. So 3 waves suggest it's corrective. So if we break down below that second wave, that finishes this off. This is now done. It cannot subdivide any further and head any higher. So that locks in 3 waves. That's why I say if we're dropping below here, we're probably headed down to around 23, 24 at least. But instead, if we break out above this local high here, that should carry price above this one. And so now we've got 1, 2, 3, 4, 5. And like I said, so you either got a leading diagonal or you have a 1, 2, 1, 2 setting up. And if this is a 1, 2, 1, 2, then your wave 3 of 3 is going to pop up nice and hard here. And so that'll give you this this target up here of around 41,469. So if this is 1, 2, 1, 2 here, then this 1, 2, 3, so 3 of 3 here, is going to get you up there around 41,469. And as you can see, that gets you right above the top of that, the wave 4 there. And so breaking out above that should confirm that bottom's done and we're headed up. We're in the early throes of the next wave structure up there, okay? You prefer it when I'm bearish? I don't know. You guys always give words, bearish and bullish. I'm not bearish or bullish. I'm just a trader, guys. I don't care which direction price goes. I just want it to go. I make money either way, right? That's the way it should be, guys, if you're trading. What's going on, Esteban? Always good to see you checking in. So really that's what we're looking at, guys. Not a bad way to start the weekend, right? We've got some possibility here. We're not guaranteeing it's going to go up, but we can't guarantee it's going to go down, right? And so if you can't guarantee it's going to go down, then that gives you some hope that it may be, that bottom may be in. Again, for me, the big thing is this right here. Is this apparent spring and test. This is successful. This is what you want to see with that test. Now all we need to do is get up above this swing high here. If we can do that, we should be good to go, guys. Should be. Can't guarantee, always, but, it increases the odds significantly that the bottom's in if we can break out above that swing high. But we still have to break out above that wave 4 there. And like I've been telling you guys, once we get through this area here, once we get through that area, price should really move up pretty well. So, yeah, it's kind of where we're at with that. Let me see here. Take a look at the DXY. So the DXY is interesting at the moment. We've printed this. This is the 1 hour here. We've printed this bullish divergence down at the in the RSI here. What's up, Claudio? Late again? Good to see you checking in, though. So we've got some bullish divergence on the 1 hour there. We've got Stoke RSI, not quite bottomed out, but, pretty low there into oversold and propping back out and trying to break out of oversold now. We've got price attempting to find support on the pivot. So I've been kind of back and forth on what this count may be. You've got kind of this thing going on off the bottom here. And so at this point right now, I've got this as a 3 and a 4. But I guess it could potentially be a 1 and a 2, depending on how you count this coming up. But I'm going to say 3 and a 4 right now. And then this I've got potentially as wave 1 here of 5. And, if this is a 1-2, then this will be wave 1 of 3, right? So either way, it would be going up. But I've got this. I believe we may have, this is such a pain in the rear end, this kind of, this area right here. But I think it may be an ABC, and then 1, 2, 3, 4, 5. Now, the question is this 5 done or is it almost done? Because if I look here, I go 1, 2, and you go 1, 2, 3, 4, 5, gives you a 3, 4. And you go here and you go, okay, is this a 1, 2, 3, 4, 5? Or is this a 1, 2, 3, 4, and then we'll get a 5 a little bit lower? Because price could still end up targeting the range low here with it. And so that'll give your USD pairs a little bit more of a breather. DXY, guys, again, we look here, it's just been going on up and up and up, and there we go. And so, this is a strong move up. It needs a bit of a breather. It's taken all those other pairs down, well, the other pairs have gone down against the USD. But again, guys, we just zoom out of here. I mean, it's making a heck of a case for a double bottom here, right? Potentially. But you've got to get above this swing high up here to kind of confirm that. That's that 93,437 area. And realistically, we need to get above this 94,741. That's that previous wave 4 if this counts correct. But there's a case to be made for a double bottom working out here right now. So we'll see. Hank still wants the mid-80s. Like I said, we'll find out if it does or not. Let me see here. This gives us a wave 3, like up here around 94,147. If this is correct here, this 1, 2, that'll give us wave 3 up there around 94,147. And again, if that's going up, that just makes it more difficult for things that are denominated in dollars to really kind of move against it. As far as FX goes, guys, the USD Canadian dollar has been the trade consistently for like a month now. I've talked to you guys about that. Anytime you're seeing oil dropping and the DXY rising, that's going to have a strong positive effect on the USD CAD chart. Because, the Canadian dollar, so much of its value is determined by oil prices, since it's such a large oil exporter. And so when oil prices are rising, it strengthens the CAD. If oil prices are dropping, it weakens the CAD. So at the same time, if you've got oil prices dropping and you've got the dollar rising in value simultaneously, that's twice the negative effect onto the Canadian dollar pair there. And so, it's consistently been the one. It's made good moves up and down, made a lot of money off it this past month. So, and I look forward to doing it some more. I mean, again, I think, speaking of oil, let me kind of look here real quick. Let me show you what's going on with the oil. Because I think oil maybe complete with its advance now. Its macro advance. I think it might have a more of a macro pullback. Let me see if I can find that chart real quick for you. Pull us directly out of our what's it called? Discord here. I pulled up the wrong one here. I'll pull it back here for you guys. So this is kind of what I've got going on here. Wave A done here. But a lot's going to depend on what's going on here now. Now what I believe we may have locally here, I think we've got a 1, 2, 3, 4, 5, and then we've got an ABC up here to this almost 65% retrace rate. You see this high volume node here at about the 70% area? All this right here at the pivot. We're just looking for rejection. This is the last. Remember, if you look left, you see this right here? This is a bunch of selling. You had a bunch of sellers in here, went up here, finished down, came down. So when it comes back up toward this level here, you're going to get supply pressure coming in on you. And that's what we're getting right here. As you can see that. So this should give us then wave 3. If it stops right there, let me see here. Yeah, almost there. Right there, about 64, 61 would be wave 3. There it goes. And so that would just be, wave 3 of A of B. Because remember, B is going to be an ABC. And this is just wave 3 coming down. So that's just wave 3 of A of B. So you'll have, 4 up, 5 down. That'll complete A. And then you have B. And then you have 5 more down for C to complete B. Yeah, that made a lot of sense, right? Again, zooming out, larger picture here. This is kind of, what we've been looking at. So you really got this 1, 2, 3, 4. And like I said, I think it's 5 is done. Just the way everything's acting. Coming off this bearish divergence up on the daily here. And then, zooming out here to the weekly. We're printing bearish divergence on the weekly. We've got this threatening to cross bearishly here on the Stoke RSI. Monthly, we are topped out here and overbought on the monthly. And RSI, again, bearish divergence coming in. So, a lot of suggestion we're coming back down. And so, that should send us at least down here into the mid-40s or something. At least. I think if we're going to do that, again, this gets you that A. I've got this showing up. Let me just take this off this higher time frame here. There we go. So yeah, again, 1, 2, 3, 4, 5 gets you just above that swing high. Then we pull back. Then we go up. So, prices, if you're do some traveling, might get a little cheaper as the summer continues on here. And then, of course, you'd have that wave C going up here. Probably mid to upper hundreds, I think, if we're going to do that. But then that'll be, an ABC, and then you're looking back down. And again, the idea that we may be hitting another negative number here with WTI. So we'll see how it continues to play out from that, but I think that may be what's going on there. So again, if this oil is correct here, then the CAD is going to be facing some pressure with its some downside pressure for it with its value. And so if the DXY can also head up at the same time, that's double bad for the Canadian dollar against the USD. Let me kind of catch up with you here. Let me pull this over here so I can see. Let me see. Andrew, what's going on, man? Great to make the show when I can thank you. Oh, well, hey, man, glad to have you showing up, man. Good to have you here. Mark says he's got to learn FX. I tell you what, guys, you know, for me, FX is really my bread and butter. That's what I enjoy more than anything else. I know there's a lot of money to be made in crypto, and I've made a lot of it. You guys know some of the trades that we've done. But, you know, at the end of the day, I really, really enjoy FX. I really enjoy FX. Forex markets are so much fun because you don't get bearish or bullish or whatever. You just trade. I mean, if you're doing it right, you just trade. Right? You just kind of trade what's going on there. Whether it's going up or down. And, you know, you don't expect something, you know, if you're looking at equities or commodities or, like gold or silver, something like precious metals. If you're looking at cryptos, you know, you expect the charts to move right and up, right? So it's always kind of, you're always expecting to go higher, appreciate. But currencies aren't that same way. Currencies fluctuate up and down. So you've always got, if you're a trader, it's a great place to trade because all you're looking for is for movement. That's all you're looking for. So yeah. Do I ever chart the USD dominance chart? It mainly moves in the opposite direction of BTC. The chart is showing a major bearish div. I don't know that I've ever actually seen the UST dominance chart. You got a ticker symbol for that? We'll pull it up. I'll be glad to pull it up. Maybe you're just calling it something else that I know. I don't know. Yeah, if you've got a ticker symbol for it, let me know and I'll pull it up here. We'll take a look. But anyway, FX, man, FX is a lot of fun, and depending on, there's some intricacies and things you have to learn. There are some things specific to the FX market that you don't have everywhere else. You know, you have commodity currencies like the Aussie and, the Aussie dollar and the, the loonie, the Canadian there. And, and they move with commodities prices. They kind of move because of how their economies are so dependent on their exports or whatever of those things. You've got major pairs, you've got minor pairs, you've got exotic pairs, and you just have to understand all those differences in them. But yeah, I mean, it's pretty great. It's just USDT.D. I can't even say it. Let me see here. Where's my little chart? Let me make a copy of this right here. Appreciate it, guys. Thank you. Let's see. Let me see if I can see what you guys are talking about. USDT dot, oops, USDT dot D. All right. And then let's put it in here. Okay. Oh, this is calculated by TradingView. All right, let's take a look here what you got going on here. Well, that weekly is pretty high as it is. But you're above that weekly pivot, pop up above the R1. This looks, gosh, dog. This looks like it might be a 1 and expanded, or a flat here, a running flat as a 2. Let me see here. What were you saying about it? You're not talking about anything. Don't believe in charting dominance. Oh, okay, okay. That's what you're saying, Hank, there. On the daily is where you saw the bear div. Andrew, let me check it out here. Daily bear div. Well, you had some, yeah, I think you're talking about this bearish divergence right here, maybe, which is leading to this pullback right here. So, I mean, yeah, there was some there. That is pulling back. Let me see here. I don't know. I mean, if I was to count this real quick, I'd go 1, 2, 1, 2, 3, 4, 5 gives you a 3, and then 4. Maybe. Yeah, so this is going to be a 1, 2 right there. And that's a 1, 2. That's a 3, 4. Unless this is all 4. Let me see here. A, B, C, D, E. Okay, that's a triangle right there. Probably is a 4 here. A, B. Yeah, there we go. So let me just kind of throw this count on here real quick, what I'm think I might be seeing here. 2. And then 2, 4, 5. And then this looks like, where's the swing low here? Is it this one? 420. 421. Yeah, so you've got 1, 2, 3, 4, 5. A, B, C maybe. Maybe finish could go up higher, but I think we've got this wave 4 here in progress. A, B, and then you have a C. And my guess right away is if it's a C, then it's going to target that S1 pivot there. Should give you a 4. And that usually makes, that's usually that 4 coming back to this area 4 here. So it could stop a little bit higher, but generally the lower half of the triangle here. Then you have that 5 coming up. So I think that maybe, loosely what may be going on there. I think we've got B, and B is done or nearing done. And then we'll look for a breakdown back below A here, looking for it to head back down to the S1 pivot. And then go on there. Tell you right, I don't know what the how this one's figured out here with USDT. It just says USDT dominance. Yeah, I don't know. We'd have to check with TradingView and find out what that is. I've never actually charted this. But yeah, again, Elliott Wave, you can chart, pretty much anything, because the idea of Elliott Wave is that what's going on in the chart there is a response of what's going on with people, right? So you can pretty much chart anything with Elliott Wave, and it works out. Yeah. So I wonder, though, let me see here. We got this. Let me throw on Bitcoin here. We'll throw on the PLX. New price scale. Kind of see how this all comes together here. Andrew says the last time the USDT.D dropped a lot, it was last October 20th, Bitcoin started moving up. Just something you've seen. Okay, yeah, that's what I was pulling up this up here for, yeah. Let's take a look here and see what's going on. So this was the last time you said it dropped right here, right? So let's start up here in September, but you're talking about December. You're talking about this big drop here. Okay. Yeah, and then it went up. Yeah, I mean, there's a clear, looks like a pretty clear correlation here, not correlation, but oh God, if I ever had to speak for a living, I don't know what I'd do. But yeah, it's going to go in that opposite direction there. It does look like. But here's the thing: if we've still got, well, if that's B there, and then it goes up, it goes down for C, it's going to pop up, and then it would drop down lower. Because this wave 5 would go up. So my count would have to be wrong if we were looking for Bitcoin to move up from here. Let me see here. Let me see here. Inverse correlation. Thank you. Yes. I'm sitting here trying to think as I'm doing this. I'm trying to see how, if my count is correct here on it, how we can get a strong enough move in Bitcoin to compensate for that move there in the other. Let me reset the chart here. Well, that didn't work out too well, now did it? Well, I don't know. You know, it makes pretty strong moves up. Bitcoin does with not a lot of movement down comparatively. I mean, you've got this, you know, what amounts to a slightly lower low here, and you've got a significantly higher high here. And then, of course, this topped out here as we were already trying to go sideways right here. Huh. I mean, I guess it's always possible as well that that this interior account, I just pulled that real quick. Maybe the interior account there, maybe it's that 4 gets done sooner. So maybe this, you know, we've got this here as a 1, 2. Let me turn this other one off real quick. So where would that 1618 be? In this area, see, it's that one right there. You know, I guess maybe we could say 3 here, 4 here. So maybe we could even say this. Maybe we could do this as we zoom in here on the 4 hour. 1, 2. It looks like we may have 5 up here. So maybe this gets us a 3 right here. And then A, B, C, D, E, maybe. And so then our triangle then finishes here. That shouldn't break down below it, though. See, that breaks down below it. It would have to be something like this. And I'm not too excited about this right here ending it the way it is. Because you got to go A, B, C. And this would have to be a D and then an E right here. And it gets you that next move up. Pattern target. I mean, you're pretty close to the pattern target there. If it did end here, though, right here, that gets you right there to the target. 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 maybe. Well, I mean, there you go. Then 1, 2, 3, 4, 5. A, B, C here. Retraces about 38.2, but it's a leading diagonal, so you know you'll often get that 38.2 retracement on a leading diagonal. So again, would look something like this right here. And then again, 1, 2, potentially done. I mean, it could potentially also move out there a bit more, but you've got on the 4 hour here, you've got this pullback coming at least. So if you were to drop below this swing low, that signals next one's coming in. You're headed lower there, which would then have your Bitcoin here heading higher. So yeah. It's not just the inverse. You can see that it does differ in areas. If we're looking at it here, It's not exact. Again, you've got like, see right here where you've got all these higher highs here. This was that February through May area, right? Or February through April area right here where we're getting these higher highs. And see right here, we're just going sideways, printing wave 2 here. We're finishing this up. And then we've got these moves here. And then, of course, we've got this triangle, possibly here or what I drew earlier. And instead here, you've got it where it's making lower lows. Yeah. So it's not a inverse of Bitcoin. So, but it's pretty close, pretty close to being it. But there is that, again, you got to be careful when you look at something like that. You want to make sure that if it is the inverse, that it is working, exactly the same or pretty gosh darn close to it. Here, this is significantly different where you're making these higher highs and lows as we finished off that wedge potentially there. And then here we just went sideways with a higher low, lower highs coming into it. Yeah. You guys are asking me questions I don't know. I've never looked at the USDT dominance chart, so I would have to look up all this information. So yeah, I don't know. Again, if we're looking at this, the one thing we can look at is it is a more clear picture than what may be here. We've got lots of possibilities with Bitcoin, but I think right here, we're potentially done. I mean, this is, looks like we've got a triangle, whether it be here or, like I said, zooming into the 4-hour there, that more local one seems to make some sense in there. And then, price hit that target area off that, and then a rapid decline right back after it. I mean, so this strong move up followed by this strong move back down. I mean, this is usually what you'll see when you get a thrust out of a triangle. You get the strong move up, you get this large wick here, and strong move right back down. It's like, just a thrust up finish and get sold back into it. Andrew, you're welcome. Thank you for talking about it, man. So, I mean, if I was to look at this, I think I would put my money toward the idea that that this is wave 4 over here is a triangle as I have it. And then wave 5 up here. And then at that point, is this an ABC or is it, wave 1 of A coming off there? Let me see here. That's only 23.2 there. If we're looking at this from there, we'd have to change that to fibs based on log. And that would give us, see, that makes sense. That would give us this this 2.0 right here. This is where wave C should equal wave A if wave A is completed where it is, and B is completed where it is. We'd have this move down here to around the 61.8, 65 area. So right here, which makes sense. You're basically just bringing price back to this previous range high here. Not right there, I'm sorry. Let me pull it down a little bit here. Yeah, see right there where that range high is? Because remember, this right here is just a range. If we go ahead and I'll just throw a box on here for you, but this right here is just the range. And so you'd get you see the volume down here, so you get your selling climax, automatic rally, up thrust, ST in phase B, I think. And then this is an LPS, no spring. This is just an LPS. So you've got, your phase A is your stopping phase here. Your phase B is this here. And then you've got phase C right here. Like I said, instead of a spring, you've just got a last point of support. Volume is less than what you had. Well, no, that's the volume at the top there. There's more on that, but you see this volume kind of building up as you're breaking out of here. And so, again, you get these higher volume as you're breaking out. This up here, so then you pull back to the you've got this SOS up here, you show strength, and you get this back up the edge of the creek. And your creek is just this resistance right here. And so, again, you'll bring this down toward that area, and then potentially head up off like that or whatever it's working with. I mean, that's how I'd say, you know, here's Wyckoff looking at this here with the volume that's going on. A good volume here, and then your volume expands as you pull back again. Interest, more and more interest, and then as you break out here, a lot of interest as you break out, it takes it out. And then, you know, what you usually see is volume will drop off as price is rising here, because at that point, once you break out of this range, nobody's really interested in selling anymore. Everybody's jumped on the, after this accumulation range here, everybody's jumped on the, hey, we're going to run up train here. And so you don't have all that resistance coming at you. So everybody's long or going long and head up there. So, yeah, I think that's what we look at. But like I said, you know, if I look at there, you know, it's a cleaner count. I mean, look, you saw quick and easy, even though I had a little bit of, I took a minute here. I mean, it was a pretty quick and easy count here compared to what we were doing over here. So, you know, it at least gives you that. And you can see here, if we zoom out, look at this. Let me get rid of this right here. So you found support in this area on this previous area of resistance. And there we go, breaking out higher again. You get that high volume node right there. Put into the daily here. Yeah, I mean, this could be, again, you know, I told you, looking at maybe like a 1, 2 as a running flat here. And then basically 1, 2, 3, 4, 5. So 1, 2, 3, 4. And if that's the 5, the 5's done there. This advance is done off the USDT. So yeah, we'll see. We'll see. That chart looks way too bullish. No, I think, again, I think this one right here, I think it's done. Or potentially so. You know, again, 1, 2 here as a 2 as a running flat, and then 1, 2, 3, 4, 5. So we've got 1, 2, 3, 4, and you know, we looked at here, this 5 up here potentially, right? And so we're done now. We hit the R1 pivot area. We're trying to find support on the pivot, but we're dropping below. We're just hovering around it, which usually means we'll see it head lower. So yeah. Hank and his cup and handles. So yeah, we'll see. I don't know. We'll see. We'll see how it plays out there. Definitely, you know, strong, you know, increase in volume here. Increase in volume right there at the lows. Well, not at the lows. It's on the high there. This one right here, popping up right here at the top up here. But no real follow through. I mean, it came down a little bit, but it stayed above that swing low. So that's failed right there. It's a lot of supply coming in, and it really not taking price anywhere. That kind of supply should have sent price below the swing low, but it didn't, which meant there was a lot of demand in this area. And then you see it picking up here again and going up and pulling back. And when it pulls back, that volume spikes up again in this area. As it's going, you see the volume kind of kicking in. You had supply come in right there, boom. But again, no follow through lower, no follow through to make a new lower low anywhere. And price continue to go up, so demand still in control in there. So yeah, we'll see how this plays out here, but definitely on the daily here, we do have that bearish divergence that played out at the top up there. It might just be signaling the beginning heading down here. And I think it's probably a pretty good idea. Again, I've got 5 down. So if I've got 5 down, we should just get 3 up, which were 1, 2, 3 here, ABC. And we should head lower. Now, whether this is A or 1, in either case, B or 2, and we'll head lower down here, at least to this S1 pivot, I think, at least. But again, if the overall is 5 waves up, we should be heading lower than that. We'll probably be headed way back down here to the high volume node. See here, if we look at this right here. Yeah, see? Make sure I've got that change there. Yeah, that's fine. It's right here to this area, you know, 50% over here at this previous area of resistance that turned to support. Right there. Or again, you can kind of pull it up to this area right here now. And you can see why price should catch in that area as it does that. So, you know, if Bitcoin is inversely following this, whoops, as it appears to be, not exactly, but pretty close. I mean, if it is, then, you know, if this is a top here, then this should be a bottomish area of Bitcoin. We should head up. So interesting way to look at it. Again, other discrepancies here. You know, you've got higher lows right here on the USDT dominance, but you've got higher highs here on Bitcoin. So it's not always, it's not 100% inverse of the Bitcoin chart, but it's inverse enough, and the count seems a bit clearer than what you're looking on Bitcoin there. So yeah, I would say it's something to look at for sure if you want to watch that sort of thing. Yeah. Let's see here. Again, we looked at oil. Oil just needs to drop on off out of here already. It's irritating me at the moment. DXY, again, still trying to potentially find, you know, a reversal here. But if not, I think, again, that might just be a 1, 2, 3, 4, and a 5 still to come toward this swing low around the 61.8 retracement area here. There at the bottom of that red range. And so a reversal, a strong reversal out of that DXY should give your, you know, your other things there some headaches for a bit. Let me see here. If Bitcoin goes back to the all-time high within this year, is it a good take profit? Will it break out? Oh, I think if Bitcoin, I had to think about your question for a minute. I think if Bitcoin's going back up here, guys, listen. I've still got this as a wave 4, remember? So I've still got one more wave higher, which means it should take out the swing high up there. And so, you know, my thoughts are, if we're getting above, if we're breaking out of this range here, my thoughts are generally that we should be breaking above the all-time high and making a new one. Now, is that going to be the end of this year or not? I don't know. I think there's a... You know, I think there's a good case to be made. We've been just kind of consolidating here, guys, since May right here. And really, we've been sideways here since back here at the beginning of the year in January, right? And we went sideways here, went up, went sideways, came down, went sideways, same area. This is really just one large range here. And so that's a lot of, you know, you've got some buying here, and then you've got a bit of distribution, and then potentially reaccumulation right here, setting up for a breakout higher. Yeah, I think there's I think if we're getting back up there, I think it goes up. Yeah. Let's see here. Will the Dow Jones break the all-time high this Friday, or will it do so next week? Who knows? I think it's probably close to a time for it to pull back. You know, maybe like a first wave of the next wave set up or something. Yeah, so we'll see. We'll see what works out there. Let's see, what else we got? Oh, we got, what else can we look at here real quick? Am I sure? Am I sure what? I'm not sure of anything. I'm a trader. Y'all silly people think that traders are supposed to be sure? I'd be concerned about traders that are sure all the time. They be smoking their own stuff, man. Let me see here. Where's that oil? Oh, that's the other one. What part right here? So natural gas doing its thing. It's over here. I think we've got 4 done here. Looks like we're heading up on 5 of 3. 1, 2, 3, 4, 5. So it's probably at or nearing, you know, subwave 1. Before it pulls up and heads out. So as long as that wave 4 swing low holds, you know, again, this looks like 3 down and 5 up. So 3 down, 5 up above that second wave should say prices headed new highs coming in there. No, you said, are you sure? If you're sure, you're all but guaranteed. I mean, if you're sure, you're sure. I don't know, you call it guarantee or whatever, but yeah, there are no sureties. We'll do it that way. But I didn't say it wouldn't go. But I don't know what you're also saying there. I didn't say it wouldn't or would go above. I said it's probably getting close to a pullback for the first subwave of the next wave set up. So that doesn't say it was going to go above or it was going to not go above. Got to listen to what I'm saying, Hank. You're not listening to what I'm saying, man. Let me see here. Yeah, so I mean, natural gas looks like we're headed up higher there, Let me see here. Oh, anything else interesting? Anything you guys want to look at? Let me know. I think right now, the story right now is what's going on with the dollar and oil. I think as far as commodities go, I think you watch oil. If oil continues to break off and come on down. Let's see here. Yeah, I think oil is a good proxy here for commodities in general. So we've had this strong 5-wave sell-off here. And we got 1, 2, 3, 4, 5 maybe. So A, B, and then 1, 2, 3, 4. We may get a little bit higher here as it hits this high volume node. Maybe around the 70.5 there at 75. But if we get that breakdown, it continues on down there. We'd be looking for it to break down below right here at 72.93 or so. But I think if we're getting a good, nice impulsive breakdown below that, I think, that's a good proxy for just commodities in general. And we should see then the dollar rallying with commodities kind of just taking a shot there, Let me see here. Where is that one? Let me pull up. I'll show you what my chart looks like on the Dow Jones. Or no, you said that. Yeah, you said the Dow, right? Yeah. We can pull up my chart here. Show you what I'm looking at right now. Yeah, so see, I've got it here. 1, 2 would be a 3 and a 4 and a 5 coming up. So I've got this 5th wave target locally here. I've really just kind of looking at this pattern target based off this wedge. Right there at around 35, 180 or so, which puts it right there around that 1 hour R2 pivot. But of course, that's going to, finish off when it comes in, next week. But there's that all-time high right here, which I've got as a wave 3. Now the question is, if it goes up here, is this all it does? Is that 5 and that's it, or is that wave 1 of subwave 1 of 5? That's the question right there. So, again, if I'm looking at this 1, 2, 3, 4, I've got that 5 coming up. That would make a new all-time high. So, like I was saying, it's getting near that point where we're going to get that pullback. 1, 2, 3, 4 here in this area, and then 5 heading up there. Quite possibly. And then we would just have to see how that's going there. If we jump out, this is the 1 hour chart. If we jump out to the daily. So right now we're breaking out into this supply structure up here, which is what's slowing this down all of a sudden. We peaked out above this previous swing high. And now we're into that supply structure up there in that shooting star type candle thing going on, which then led to that gap down and the strong, 2 days following it on the decline before it rallied a bit and then, of course, dropped some more there. But, the bullish thing for the Dow Jones that I see is we moved in sideways between the pivot and R1, pulled back, retested the pivot as support, and we're breaking out above that swing high. So that's a bullish move. So overall, I would think that it would just be like wave 1 of 5 that we'd have further up, I think. So, you know, if I'm looking at that, that's kind of what I'm thinking. As far as the weekly goes, I mean, there's a nice, you know, bullish. Let me get this out here. Bullish breakout of oversold here, crossing bullishly across right there, right above it. And then, you know, everything's kind of curled back up. So, I mean, yeah, that looks like it wants to go up there. We've got this inside bar. Inside bar? Well, anyway, you had this large drop here last week and this good move up. Well, not last week. 3 weeks ago, and this good move up here. On the weekly, you can see we're right here at the R1 on the weekly. And we moved in sideways between the pivot and the R1, and we're kind of getting ready to break out above that. Which, you know, says, hey, we're probably headed at least to the R2. At least there. Probably. Can't guarantee anything. But again, you know, right here on your monthly, overall, from back there in January of 18, you know, we've got these lower highs. But again, you've got this going on in here as well. And so really you should look at it from here to here, not from here to here. Because you got this deep move here. And so here we're just getting higher highs and we're getting higher highs. So interestingly, here on the monthly, if I was to look at this and count it, I would go 1, 2, 1, 2, 3, 4. So we got a 5. So we got 1, 2, 3 coming up, 4 on the pullback, and then 5 up. And then we'd be done. If I'm looking at it this way. So, and because of the start here, the way you've got this strong start, I think we would expect wave 1 to be the largest, wave 3 to be the middle, and wave 5 to be the shortest. If we were to look at it that way. Let's see here. So that just gets you to the 1.0 there. I mean, it would be really short. Again, this is just looking at the monthly, and it may not mean anything at all as far as that goes. But if I was just to try and chart off the monthly here, that's what I'd look at it as. Interesting. Okay. Well, anyway. So that's kind of where we are with that. Looking for it to go higher overall. I mean, it was the one that had a great start this morning compared to the other two. It had this nice gap up, large candle spread breaking out of that resistance and up over the pivot. We should expect to probably see some follow through higher just off that. But, you know, again, if you're looking at the NASDAQ composite, for instance, in comparison, oops, it just kind of moved on up here, right? No large gap, you know, no large gap up or whatever. Still waiting to break out above its wave 3 here. Only in 3 waves so far. So you need to see 5 waves, but this looks like a, you know, it's just A, B, C. It's just 3 waves here. So we should get 5 up, 3 back, 5 up kind of thing moving with it. So again, you know, overall looking for that to hit up as well. Broke out above the pivot here. Hit it, pulled back, broke out above it, filled in the gap. And we're just up in this bar right here now. Just need to make it on through that. You've got this supply structure. This bar right here is a supply structure. Oops. So you're going to expect some resistance there. But a breakout above that should have people jumping on board to head up higher there. Right above that. And then again, you know, so NASDAQ heavily tech. You know, very tech heavy. SPX, this is the S&P minis here for the SPX. Still kind of tech heavy, but not as anywhere near as heavy as the NASDAQ. But right here, it looks like we've got a 1, 2, 3, 4, an extended 5th here. So just a leading diagonal. Just popped above up here. We're topped up here, breaking out here in the RSI, topped out and overbought here with the Stochc RSI on the 1 hour. And so expecting it to pull back sooner rather than later and then work its way up there. Minimum target, of course, what we have it at right here. By the way, this is your minimum target right here, $4,366.75. Secondary wave 3 target up there, $43.92. But, you know, again, that'll just give us a 3 right here with what we've got. So 1, 2. That'll give us a 3. We'll put back for a 4. And then we'll head up for a 5. If that's going to play out like that. So, you know, there's a slight difference there on the 3. So we'll continue to see how it plays out with it. TLT, oh man, haven't looked at TLT today. Let's see what we got going on there. Remember, TLT, guys, is your long-term government securities. Oh, look at that. Look at that. Basically hit my wave 3 target up here, and then boom. Gap down this morning. Makes sense with the gap up with the others. So I think we've got 3 done there. Which means 1, 2 over here. There we go. So probably looking for a pullback down here toward 143.79. So maybe you get an A, a B, and a C down here toward this area. That'll give you a 38.2 pullback. But, you know, if it continues beyond there, you'd look at the 50% right here. And then that would give us a wave 5 target. Should be right up there with this ascending line there. What is that? Parallel channel, yeah. So yeah, up here at 153.20. So if we get the pullback to 38.2 and then the rally back off that, should give us a wave 5 up here around 153.20. Remember, the idea of the TLT is as it rises, people are getting. It says that people become more fearful of the market. Who's here? Othmane, what's up, man? Good to see you checking in, buddy. Yeah, so, you know, again, the idea is that people, when they get nervous with the stock market, they move their money from the stock market into long-term government securities because those are as safe as you can get. They're backed by the full faith and whatever of the government, so really the only way you lose your money on that is if the government collapses. As long as the government's still in business, you're getting your money, right? So, you know, that's why people move into it. I know you guys have your opinions about the dollar and whatever, and a lot of it's off the nonsense that you hear on Twitter. Stop listening to Twitter, guys. They're going to tell you what you want to hear, and they're going to make it sound like it makes sense. But most of them have no clue. Most of them have a very, very rudimentary background in economics of any kind, and global finance. So you've got to be careful with that. Yes, the dollar is devaluing over time. Yes. But that doesn't mean it's going to collapse because, you know, it's where it is in the world, you know, in comparison to the other ones. So you have to always understand the U.S. dollar in relation to everything else. And if you're so interested in, what is it? The money printing, right? It seems like that seems to be the big thing on Twitter, right? Oh, the government, U.S. government's printing so much money. Right? Let me show you something. I posted something here if you guys are following me there on Twitter. Let's see here. Oh, total assets of major central banks. Look at the ECB right here. Look at how it just completely dwarfs what's going on here, and it just takes off on a larger, straighter upward move there than what the Fed does here. And you can see the BOJ tapering a bit here. You can see it's already taken down. The PBOC is taking its move up again. But that ECB is well above where the Fed is. So if all you're interested in is how much dollars are being printed, then this right here should at least let you know that the dollar is not as bad off as you think it is. All right. So ECB really, really loading up with what it's doing there. This is interesting. So somebody posted this. The long view posted this. Fewer workers are coming off unemployment than normally would with this many job openings. Remember, we've talked about this a few times, right? We've talked about the fact that there's jobs out there, and people that I know are having trouble getting hiring people. And the idea, these surveys and things they've done where people are saying, "Nah, I'm not interested in going back to work. I want to stay at home and work. Work from home. It's too dangerous to go back to work, COVID and whatever, these things." So people are basically not, the jobs are there, people just don't want them. Oh, they're not paying enough. Well, paying enough for what? Because the people I know and what we're seeing generally are these increases in salaries and whatnot. And then you can look at something like Canada, which released its job numbers today, and it had this increase of 250 somewhat thousand jobs today or in June. But of those, the increase came in part-time work. There was the full-time employment was sliding down. So if you're in Canada, that's not a good picture, right? You've got an increase in jobs, but it's in part-time. Your full-time jobs are decreasing. So that's not a good thing there either. So a lot of moving parts, guys, when you're looking at all this. But the fact is there are jobs out there, and people are just not taking them. Now, again, we talked about the Fed numbers that we had last week, I guess it was, wasn't it? Yeah, last week. And we talked about how that there was an uptick in unemployment, but even though the jobs numbers there was an uptick in unemployment, and I talked about how that was likely the result of states like Mississippi and I think Virginia and a few others, which are cutting off those extra federal benefits for unemployment. Now it was like $300 a week or something like that. Was it $300 a week? It was something like that. But anyway, they cut that off, and so more people are being forced to go back and look for work, which is the unemployment there or something. I don't know. I think it has something to do with that, as far as the uptick in unemployment goes, more likely than not. Just more people out there actively looking. Because remember, the unemployment numbers that, at least especially here in the U.S. that we get, are based off people that are looking for work, actively looking. The unemployment number is a lot larger than that. There's people out there who aren't even looking, and that's not included in that unemployment number. So, this stuff doesn't help any. Let me see here. Tell you what, it says not just extra unemployment pay. Gosh, man, I got to see what this says here. But not having to pay your rent and mortgage still. Yeah, we've got those moratoriums that are about to roll off as well. Paying for your like Telluride just said there, your rent, your mortgage. And so when that comes due, what are people going to do, right? I honestly think that when that happens, that we're going to see a lot of foreclosures going on, because the people weren't able to just not pay it and forget it. They had to agree to whatever their mortgagors' terms were. And a lot of those mortgages said, well, when you start paying again, you have to make up everything that you didn't pay at that point, right then. So if you've got a $2,000 a month mortgage and you didn't pay it for 12 months, you got $24,000 you have to come up with right when you start. And if you don't, they can foreclose on you. Some of them give you the option of actually adding it onto the back of your mortgage. So you don't actually have to pay it up front. You just get it added onto your mortgage, and you end up paying for it in the end, along with the interest cost over all that time. So different ways of doing this, but I think a lot of people aren't going to be able to do so, aren't going to be able to pay, and I think it's going to cause a lot of issues. And when the housing market starts to go down, that's a big warning sign for your overall market health. Let's see here. Is this real, bruh? I like that. What's up, man? He says, I've heard a bit recently about finding your edge as a trader. Personally, I feel like I'm so far away from that, trying to learn, but I don't feel I have any specialty that separates me from everyone else. Any tips from your experience on developing this edge? I think that's a bunch of nonsense. Don't stress out over it, man. Honestly. Again, as an example, every Wednesday for our Tier 3 members, I teach new techniques and new strategies, rules-based strategies that our members can use without any edge, without anything, without having to know how to trade at all, to actually find a good entry, a real entry, a logical entry. It just, the rules say, if this, then you enter here, you put your stop loss here, you take profit here, and you do it. And you don't need any edge for that. I think the people that are talking about the edge are either they're just, there's a lot of stuff that goes on, guys, in crypto Twitter, other social media. There's a bunch of sound bites that just get thrown around, and sometimes even by the bigger names who, I know a lot of you guys follow these guys that are business people, but they're talking about market strategy, trading and selling, but they're not traders. And you got to be careful with that, because they don't know what they're talking about. They were all the ones telling you guys back over here. They were the guys that were all telling you guys to buy the dip, buy the dip, buy the dip, buy the dip, all the way down for $30,000, $35,000. All right? You guys have to learn what you're looking at, who you're listening to, do they have any, why are you listening to them? Are you listening just because everybody else does and because they make you feel good, because they tell you the things you want to hear? If that's why you're following somebody, stop following them for that. You should follow them because they make sense, but make sense not just for what you want to hear, but just makes sense in general. But a lot of times as a new trader, you don't know what making sense actually means, right? In terms of the markets, because you don't know. You don't know what you don't know. One of my favorite sayings, not just in trading, but in everything, guys. Politics, religion, whatever. Everybody's an expert because they can say something about religion and politics or whatever, but very few of them actually have any understanding of it, any real understanding of it. And it's the same way with what you guys follow online with a lot of these large accounts on Twitter. There are people that have made money as business people, but I'm going to tell you what right now, some of the worst traders I've ever met were people that were good at business. They weren't traders. They knew what to do to be a successful business person. They had no clue what they were doing as trading. So then they'll go up there and they'll talk about edge, edge, edge. It's the cool new catchphrase, especially on crypto Twitter. Ignore it. If there is an edge, it's going to be, probably more FA related. Because it's going to be, your edge would be like, okay, where are you getting your information from? Are you getting it somewhere before anybody else or somewhere better than where somebody else is getting it? But honestly, when it comes to trading, risk management is number one. Proper risk management. That's why we teach it so much, and we're so adamant about it at TWC. But yeah, as long as you've got that risk management in there, the rest of it is just figuring out which system or which theory gels with your thought process, and then just doing that and not giving up after 3 days of not trying it really. It takes commitment. It takes time. Like anything else you do in life that you want to get better at. Trading is no different, guys. Stop thinking you're going to come right in and be this amazing trader in a month or 3 months or even a year. It most often takes, multiple years to get to the point where you're a consistently profitable trader. But it's because you have to develop a system. It's not about the chart that's in front of you. It's about the system you develop that you can apply to that chart and the other chart and the next chart and then in this other chart and this other thing. Trading is all about your system. If you have a system that works consistently, doesn't win every time, but it works consistently, where at the end of the day, you're making more money than you're losing, then time and compounding take care of everything else you need. Traders get caught up when they start looking at every trade on its own. And they're not developing a system for themselves. So yeah, I hope that helps, man. I hope that makes you feel better, because it's just so much nonsense there on crypto Twitter, man, and social media in general. You don't have to have some edge. You don't have to be special. Some of the best traders I know are just regular people, man. They really are. There's nothing, you know, you meet them and there's nothing significant that stands out about them. But they apply great risk management, and then they, you know, they've created a system that works for them. And it takes time to figure out what that system is. But that's why the risk management is so important, because again, I keep telling you guys, I'm gonna continue to say it. When you become a trader, this is what it looks like. This is where you enter. You lose money at first. Nobody is special. Everybody loses money at first. The goal is to stay liquid, to have enough capital so that as your curve starts curving back up and you start making money, you know, you can make it to that point. Most people, they start right here, and 3 months in, they're out. They've blown all their cash there. They've never made it to the point where it goes up consistently. That's the problem. Risk management. If there's an edge, that's it, guys. And it's not really an edge, is it? Let's see here. DeWads, what's up, man? He says, I lost a ton of cash following the crypto Twitter. My edge is tier 3. Well, you know, again, guys, you know, it's just what I do, guys. You know, I just want, if you're there with us, I want to do everything I can to help you figure out who you are as a trader investor and understand what's going on with the markets, and then allow you to over time, develop a system that works for you. Anything else is just not going to do it, guys. All right? Let me see here. Michael Williams, what's up, man? He says, without question, the best investment, guys, I can't even read here, I've made in myself since getting into crypto is joining, TWC, by taking advantage of the T3 discount. Hey, man, I appreciate you for saying so. Thank you, man. I really like it when our members, you know, if that's how they're feeling, they say something about it, because I can come out with the best intentions in the world, guys, but let's face it, most of the people that do what I do here, what I try to do day in and day out, are just there. They don't care about the churn. They're just there to get your money from you. They don't care if you're successful. I can't guarantee you're going to be successful, because that has so much more to do with you. You have to be able to, your mind has to be open to accept that you don't necessarily know what's going on. That you need to humble yourself enough to be able to listen and learn more, right? And that's really difficult for a lot of new traders to do. They don't want to do that. And then you have to be able to put the time and effort into it. And you have to be accountable to yourself. You have to be. These are things that, the one thing you're going to get is the traders that are not consistent traders, they are not doing these things. That's why they're not consistent. That's why they're not successful. You absolutely have to take these things. So, I mean, I can get in here. I can tell you, yeah, I'm going to give you all the secrets, which really aren't any secrets of trading. But unless you're accepting these things I just said there and doing that, it doesn't make any difference. It'll never help you. So I try and do it every way I can. You know, as I always say, you can lead a horse to water, but you can't make them drink, right? Not that you all look like horses or anything. But really, I mean, that at the end of the day, man, all I can do is show you. And I can try and show you different ways and try to explain it in different ways so it clicks. But at the end of the day, guys, it really is up to you to make the decision, jump into it. So, yeah. Let me see. TV Kamal, what's up? Says, second test at Bitcoin 29K, big spike volume at Binance. It is bearish. Oh, you're asking me. Looks like bearish, still got control when volume is bigger on second test. I don't know what second test you're talking about. Oh, you said on Binance, right? Oh, you're looking at BTC USDT perp. Well, this is just cracking here. Let me see here. Oh, let me find that one right there real quick. You said BTC USDT with Binance? Oh, you said perp though, right? Okay. I kind of put my date on there so I know where I'm at on this thing. Let's see. There we go. Where is the volume larger? Oh, you're looking at here versus here, right? So you've got this little bit of volume here. First of all, you have to understand, first of all, that this is futures, whereas this right here is spot. So your futures are going to act a little bit differently because of their high leverage, okay? But what I'm looking at here is I look here and I look here. And so, first of all, it doesn't even look like it broke down below the range here. All right. So the first thing I notice here is that this didn't even break down below the swing low. A lot of volume, didn't even get down below the swing, couldn't even push it down below the swing low. Huge demand wick. So like I said on the other one, now I'm most interested on this spring or this terminal shakeout here. I'm more interested in now, what does this secondary test do? So you have your initial drop right here, and then you need to look at your secondary test here. This is going to test this area and see if there's still a lot of demand there. And what do you see here? You see that the volume, whoops, I don't know why I just disappeared, that the volume decreased significantly. A lot less interest down here than there was here. A lot of selling going on here. Not much selling at all going on here comparatively. So this is a successful retest of this area right here. So now what we need, as on the other chart there, is you need a breakout above that swing high right there. If you get a breakout above that swing high, that confirms this secondary test, which confirms your spring down here, or attempted spring. And right now, again, you're potentially in this A, B, C here right now. So you can also just draw you a channel like this if you want. If you're on this BTC USDT perp chart here. And you can just look for a breakout above that, which should send you up. That'll give you this pattern target here of, just about $3,750 above the point of breakout. You'll be above the H4 pivot. You'll be above the swing high here, confirming this right here. Your next target becomes this supply structure up here. But again, if you're getting above this, it shouldn't be a problem to break out above that. And once you're breaking out above that, really all you need, this becomes your last hurdle right here. You break out above that over here at 42,460. That should be all she wrote in heading up there. But you've got each of these little things along the way adds more and more confidence to the idea that this is the bottom here. So you potentially, again, got a 1, 2, 1, 2, or you've got a 1, 2, 3, 4, and then you get a 5 as a leading diagonal and pull back. But by this time, once you're up here, you're now above the high volume node, which means this area works as support now. Right now, you're trying to break out up through all this resistance. Once you get to the other side of it, this flips to support. So again, you can get this as potentially a leading diagonal here. Something like that, right? And then your price just kind of does this, this 1, 2, 3, 4, 5, drops down here, and then heads up, probably closer to this swing high right here, actually. But that gets you a 1, 2, a short 2 there, and then you get a 3 on the break. And you should expect this 3 to extend once it gets above this area right here. This is the last of your resistance here. If we're breaking out above this area, anybody that was bearish should be looking to go long. Covering shorts, looking to get long there. That's your last area there. And so you should see a strong advance through that, taking it up. You're welcome. Let me see here. DJ, what's up? Says, does seeing the Wyckoff accumulation all over Twitter lead you to believe it's less likely to play out? Seems the majority is always wrong, and yet I'm seeing a lot of the same Wyckoff patterns emerging. No. You guys got to be careful with that idea of the market being wrong or whatever, because it's a nuanced way of looking at it. But usually people are newer that are trying to apply it, and then it always seems like that things are not that way, right? So most of those that you see, I'm willing to bet, don't even have volume analysis on it, do they? They're just this right here, and then they've got a schematic, right? I'm willing to bet most of what you're seeing is that, right? So I wouldn't even, those people don't even matter because they have no clue what they're talking about. Wyckoff is price action and volume analysis. It's not just price action, because your ranges look the same, whether they're accumulation, reaccumulation, distribution, or redistribution. One thing you'll learn as you spend time with Wyckoff is that they all end up looking the same, more or less. What differentiates them is what is going on with this price action and volume here at those important levels within it. Is the volume coming at the bottoms or is it coming at the top? These types of things are what matters. If you've just got this right here and some schematic, you say, oh, it looks like that schematic. Well, you're an idiot then. Okay, really, you're not an idiot, but it does show a real lack of honest TA. Again, you can tell who's a real trader or not. If you're a real trader, then you're not going to apply something that you don't understand. And some people get back at me here and go, oh, I'm a real trader. I'm putting money in the market every day. Yeah, but are you consistently profitable? No. Well, exactly. You haven't learned how to trade properly yet. When I say, a real trader, I mean somebody that is consistently profitable. Real traders don't lose money consistently, guys. I don't mean to say it any other way than that. It's not meant to be a put down. It's meant to be a way to delineate the reality of what you're dealing with, because you guys are coming in as new traders, right? And you want to be successful traders, right? And so you follow these people that sound like they're telling you a good thing. They sound like they know what they're talking about. It makes sense, it seems like. But if you're able to stick around long enough and learn enough about trading, you'll find out that most of what they say is just a bunch of garbage. Half-truths, outright lies. But they sound good to somebody who doesn't know. You don't know what you don't know. By the way, there's no guarantee that this is accumulation here either. Like I said, we've got a good setup here, which makes me lean toward that because of the, and same thing on the other chart here. Because that spring and test there, right? Same idea. Large volume on the spring, very little volume on the test. That's a good sign, but we need to get up above this kind of area right here. It's really this, let me see here. Let me zoom out to a daily time frame here. It's really this bar right here. This is really the bar. This is the one you need to get above. That you notice that's right there at the EQ here of the range. It's right there around the pivot, the daily pivot. So, if you just look at this any other way, breaking up through that daily pivot and get above that swing high, I mean, that's bullish. It's that same area, this area right here. Look at, you look right here. Look at how you found support almost exactly where you found this resistance right here. All the way across. So we've got a good setup right here, but we do need to see follow through above that level. If we're dropping down below this level, this is only 3 waves up then. And so if this is only 3 waves up, it's probably corrective. And again, you get over here and you say, okay, well, how far is it retraced right now? And so it's retraced right here to the 65%. So when you're looking at that, we've got 3 waves up, 65% retracement. That's a solid wave too, guys. But if we can break out above it, all of a sudden, it becomes possibly, 1, 2, 3, 4, 5, or 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, kind of going up there. Okay? Let's see here. Telluride says, real traders also lose money. Don't trust the CT accounts that always win. Exactly, guys. I said this for so many years now. If you're going to be a trader, you have to get comfortable with the idea that you're going to lose money. It's going to happen, guys. It's just part of what you're doing here. But that's why the risk management is so important. everybody's like, oh, I don't want to apply risk management properly because that means I'm going to have a much smaller profit and I want to get rich yesterday, right? I mean, admit it, that's what we feel like, right? But it's that mindset that makes you lose money and kicks you out of the market to begin with. You have to change your mindset, guys. You have to be humble when you come in and go, I have no clue what the friggin' A I'm doing here. And I need to learn. If you cannot admit that coming in, never traded before, if you have been losing consistently for 3 years and you can't say what I just said there and accept that as truth, don't be in the markets. Leave the markets, because all you're going to do is continue to lose money. You have to recognize that. But that's why, again, risk management is so dang important. Rule number 1, protect your capital. Rule number 2, increase your capital. You can't increase anything that you don't have left. So if you're ignoring rule number 1, you'll never make it to rule number 2. Right? You absolutely have to protect your capital, guys, especially when you're just starting out, when you're a new trader. Okay? Like I said, guys, I don't sit here and tell you the things that you want to hear. Unfortunately for you. At least on the emotional level, unfortunately for you. But I do tell you what you need to hear. Because trading is serious. It's not a game. Everybody always talks about, what about these trading competitions? And, okay, great, fine. If you guys want to do it, do it. But for me, trading's always been real. The competitions are more gamification of it. I'm not interested in it. Trading competitions make you, do stupid things because you're trying to win rather than trying to make money. You say, oh, but I'm trying to make money so I can win. No, you're trying to win. And in doing so, you're going to try and make money in any way possible. You're going to take trades that you shouldn't take. You're going to feel pressured to do things you shouldn't be doing or that you won't do normally. Yeah, so I'm not a big fan of trading competitions and whatnot just because that's the way it is. I see, trading is a way of just really making your livelihood so much better. But, some people do it. It is what it is for everybody, right? But don't let anybody out there tell you that you have to win 75 or 80% of your trades in order to be successful. Again, I know people that do it with, 25, 30%. They win 1 in 4 or 1 in 3 of their trades. And they live a much better life than you're probably imagining that you want to live at the moment. So, yeah. But anyway, guys, I guess let me get out of here. I've kind of told you what you needed to do there. I hope I've given you some stuff to really marinate on, really think about a lot. There's so much nonsense that goes on out there, guys, as traders, that you're out there in social media. And it's easy to get caught up in the nonsense, especially when it seems like everybody you're watching is repeating the same sound bites. It pays to not be a follower when it comes to trading. At the end of the day, it's your money. So when you make a trade, it's nobody else's fault but your own. If you're making a trade because somebody said do this or that, it is completely on you, guys. It is not on them for being wrong. It is on you for doing what they said to do, especially if you aren't paying them. But even if you are paying them, understand that, they can be wrong. There are no guarantees in trading. Once you get that all figured out and you figure out how important risk management is and you start doing it properly, then you'll start seeing your account building little bit by little bit. And if you've only got a little bit of money in there, $1,000, $10,000, something like that, it's going to take a little time, guys. That's the reality of it. Again, I'm not here to tell you what you want to hear. I'm here to tell you what you need to hear. But at the end of the day, if it took you 5 or even 10 years to get where you want to get in terms of wealth, what would you be doing for that next 5 or 10 years anyway? You're still going to be working. At least learning how to trade properly and doing it properly gives you the ability to potentially end up well ahead of where you ever would have been, after that time, right? It's all about putting your head on straight, getting it all right in there, guys. So, like I said, we would love to have you joining us over at Texas West Capital. We talk about all this and so much more all the time. We have got such amazing people that are part of what we do there, guys. You've seen some of them talking on here. Very helpful, very, man, you know, just great people to be with. And I think it's because of what we do and they stick around for so long. So we've got, you know, our group of people have been around for well over a year, guys. Some of them almost 4 years now, the entire time we've been around. And so that makes it for a more comfortable place for new traders to come in and learn. So we'd love to have you there. But if not, or even if so, don't forget, I'll be back on, though this is Friday, isn't it? Wow. I'll be back on Tuesday at 11 a.m. Central Standard Time, okay? And we'll take a look at what's going on this weekend. We'll take a look at everything else that's going on there in the markets and whatnot. So until then, I hope you guys have an amazing weekend. You trade safe. And remember, no matter all this stuff we talk about, at the end of the day, the only thing you control is how much you lose. That's it, guys. That makes risk management the absolute most important thing you'll do on a daily basis. Most important thing you're going to learn as a trader. And the thing that I still, to this day, work on every day. All right? Thanks a lot for checking in, guys. We'll catch you later. Take care.